Okay, so what we have here is we've got a attempt on a short in a bit of a compromising area with Nasdaq. However, I'm erring on the side of a short because we're in a downtrend in the smaller time frame. It was, in my opinion, a nice clean entry around the 20 moving average on both the 3-minute and the on both the 3-minute and the 5-minute time frame. But so this is the compromising thing. While we're pushing down in a short, in a downtrend in the shorter time frames, and probably. Yeah, I mean, it doesn't look like a trend in the 15-minute, but you can obviously see the significance of the pressure to the downside. But in the smaller time frames, you're definitely in a downtrend. And so the compromising thing was that the entry that I took was inside of a bullish order block and a bullish Fibonacci retracement level as well. But I have rules that dictate when I trade against an order block. And so essentially there's some things that I look for where, like, I'll just leave it at that because it's very meticulous. There's some things that I look for, and if I see those things occurring, then I will trade against the order block. One of those things is that my rules can't be met for if we're in a bullish order block, my rules can't be met to take a long. If that's the case, then I would trade against the short-term trend and go with the order block as opposed to trading with what looks like a trend. So in this case, the rules for me taking a long position were very close to being met. Very, very close. They were off only by one particular thing. And so I took the short because the rules were not met perfectly, but they were very close. So honestly, this could go either way. But again, I've erred on the side of being bearish, and so we'll see what happens. So we're testing the 50 moving average in the 3-minute time frame, which in my opinion is not good because in this situation, because what happens typically is 9 times out of 10, if you see the 3-minute chart touch the 50 moving average, then 9 times out of 10, the 5-minute chart is going to show the same thing within minutes after. So the reason why that's not good, and that sucks for me, is because a push up to the 50 moving average in this particular trade would definitely hit my stop and knock me out. So we'll just have to see what happens. We did tap it in the 3-minute, and so my presumption would be that we're probably going to tap it in the 5-minute, which would hit my stop in the red and knock me out of this trade, and then I would end up losing somewhere around $200 in this trade. I mean, and that's really it. That's all I got. And I'm not going to jump out of the trade early. It's just going to, I will consider it an invalidated move if and when my stop gets hit. And so at this time, I do think it's going to get hit, but I don't like to jump out of trades early. I just like to let them run their course, and if the stop gets hit, then it's invalidated. I'm pulled out of the trade, and I don't need to go back and forth with myself anymore about whether or not I'm right or wrong or how this looks or that looks. It's subjective at that point, and I just try to hold to that point. I had this problem before where I was just constantly jumping in and out of trades. Like I'd get in a trade because I felt for whatever reason it made sense to, and then I see candles do certain things, and then I freak out and pull myself out of the trade early, and then obviously a number of those would have lost anyway, and then a good number of those would have won. So I've really had to work to get out of that mind frame of like just trading in fear, and just really getting to a point where I accept my losses. So if it's going to be a loss, then it'll be a loss, but I let my stop invalidate the trade instead of my moment by moment emotions, essentially. So we'll just wait and watch and see. I don't think that this trade is going to make it, but there's nothing that's happened that's invalidated my original premise for getting inside this trade. So again, we just hold and see what happens. Also, notably, we do have, as you can see, let's just make these bigger. All right, so as you can see, we've got, I'll just map it out. So we had a fair value gap down here, which it looks like we tested and it held up. And then we have another fair value gap that exists right here. So most people will probably just cancel this trade because you've got the support here and you have the support here, but I'm a big fan of really only trading fair value gaps with like very specific rules and parameters. It doesn't mean that I'm always right, but it's just if they don't meet a certain criteria, I just don't validate them, and I just trade like almost like they're not there. And that's just based off of back testing and looking at fair value gaps that actually are respected and get played off of and don't come back to just totally demolish the fair value gap. And but I haven't been trading fair value gaps for that long of a period, so my rules around fair value gaps are not like airtight at this point. I just kind of tweak my rule set around fair value gaps as I progress, as I move forward into my trading. So basically, you can see where my take profit is. So this is about a 1-to-1. Yeah, this is a 1-to-1 that I'm shooting for. And ballsy here going up against two back-to-back bullish fair value gaps in a bullish order block, but again, I just got to stick with my original premise here until it gets invalidated. So we're getting a decent push down, but at the same time, we know that fair value gaps act like magnets, and they pull the market back into them. So we're not going to get too happy too soon. I mean, the only I'd get happy though, like, I mean, honestly, I can't even really relax in this trade. It would just, it'd have to blow out this area right here really for me to get happy. And then like with all this potential support, usually like you really want to see these areas get broken fast and hard, and if not fast, then you really want to see, like, when it does move, you want it to move hard, but preferably fast and hard, just because obviously when you're moving through support, it's support, so it makes it difficult, it makes it, you know, it's a sticky area to try to get through. This candle looks good so far. We got 15 seconds left on it in the 3-minute time frame, so we'll just continue to watch and see what happens. If we can break through and close below this fair value gap, then we'll look to see if we can get back inside of this one, and see if we can close below that one as well. And generally speaking, I wouldn't look to get out of this trade until at minimum until the stochastic is oversold. In the smaller time frame, not the higher. And specifically, I'm looking between the 3-minute and the 5-minute. Also on my mind is 12:30 New York time gets a little tricky. So right now it is 12:18, 12:19 New York time. So definitely by 12:30, if I was in profit, I would protect the trade with a break-even stop. Just because I feel like the moves and my rules and everything, there's just certain times of the day where they become less reliable. 12:30 to 1 o'clock is definitely one of those times. And then generally in the afternoon, usually the entries are good, but the moves are weaker, with exception to power hour. So if this continues to move down, likely what I would look for is for this fair value gap to invert. So rather than acting as a bullish fair value gap, acting as a bearish fair value gap. The reason I would be looking for that, and I'm just telling you what's going on in my mind, the reason I would be looking for this to invert potentially if we continue to pull down is I don't trade shapes, but I we'll sometimes kind of use them as a little bit of a guide, right? So as you can see, we've got like the M or the double top happening right here. And so what I might look for with that being said is for this to push down some more and then possibly pull back into this fair value gap and then continue to reject down. And what do we have on the downside? Well, shit, the only thing that I can really see in terms of liquidity, that what I have on my chart is there's a 4-5, meaning April 5th, April 10th, and April 11th, like points of liquidity that have not been run. These London lows from 3 different dates that have not been run. I'm trying to stop obsessing over these levels because I've been waiting for these levels to get run for quite some time. But that is the liquidity that I see here at the bottom. And then so that's kind of what I would be looking to see get targeted. So it's either the bullish order block that sits just below the one that we're moving outside of to the downside, and or that area of that's the area of liquidity where we have a bunch of those London lows that have not been run yet. So let's go ahead and put our break even stop here, and we'll go ahead and remove that. All right, I'm looking at the 1 hour time frame and I'm trying to pinpoint this order block. All right, we're already like moving through it, so we're just gonna have to be patient here and just see if we actually hit this or not. 10-2 in each of them. I could potentially try to hold out to hit at least one of these London lows. I just don't know how. I don't have time to adjust it. It's gonna hit my thing. I could, but like let's just stick to the fucking plan.
Order filled.
Okay, there goes that, and we're out. So let's see if we can get down to these lows right here. So we start around 18,085, and these lows go all the way down to 18,04350. And I'm referring to, again, there's 3 London lows where the liquidity has not been tapped since it made those lows. I wouldn't be surprised if it hit those, but if it didn't, I guess I wouldn't be surprised either, because I've been waiting for these lows to get hit since last week. I don't know when it's going to happen, but I think that's what I'm going to wait for, is to see if those lows can get tapped. And then if so, I would look for a reversal to the upside. Depending on how clean a potential setup looks in this bigger order block that we are approaching, this bullish order block, that could be a potential area to take a reversal in as well. So we'll see what happens, but we got the 1-to-1 as desired in this one, so we'll wait it out and then see if we can scope out another area